This is Troy Applehans with CattleFax, and welcome to the closing bell for the week ending April 15th, 2011. The cash-fed cattle market came under pressure this week as the majority of the trade in the north was at $119 live, which is $3 to $5 lower than last week, and $190 to $191 dressed, which is $5 to $6 lower. In the south, live trade occurred at $119, which compared to last week is $4 to $5 lower. This is in conjunction with an April live cattle futures market that saw a drop of $5.70 from last week's highs to this week's low. Trade volume was moderate nationwide, however the cattle feeding segment remains very current on fed cattle marketings. The feeder cattle and calf segments saw a decline in price this week as well. For the most part, feeder cattle were $2 to $6 lower, while calf values declined anywhere from $2 to $7. It is very apparent that with corn futures starting out the week at the highest levels in history, combined with a declining deferred live cattle futures market, that something had to give in the lighter weights. The cost to add weight gain at the feed yard level are expected to continue to weigh on the cash feeder cattle market. As far as calves are concerned, the majority of stocker operators already have their needs for grass cattle filled at this time. And in the bulk of the southern states, the drought, which will be discussed later, has severely hampered the demand for calves as grass availability becomes more and more scarce. As far as the beef complex is concerned, it was softer this week with the choice cutout losing just over $3 and selects declining $2.68 as of the Thursday close, with lighter than ideal sales volume. With cool weather still apparent in a large portion of the country, the big push in spring grilling demand has still not taken place. Expect middle meat demand to increase going forward, while end cuts will tend to lose leverage in the marketplace. As was mentioned earlier, the severe drought conditions occurring in a large portion of the southern plains states, as well as the southeast, are very quickly becoming a major concern to stocker and feeder cattle operators in those regions. In many instances, the grass just never came, nor has or is the moisture. Already a significant number of cattle destined for spring and summer grass never had the opportunity to see it, and have subsequently been shipped to the feed yard. Operators are challenged from a pasture occupancy standpoint already, in addition to being left to wonder if any moisture will come. This is a compounding problem as those producers are challenged to set a base weight as well as try and attempt the timing of when the cattle will have to be shipped. Not only that, but with cattle entering the feed yard at lighter weights and corn trading at all-time high levels, the cost to add an additional 200 or 250 pounds that normally would have been added on grass will significantly weigh on price levels and profitability in the stocker and feeder cattle segments of production. The dry conditions are expected to continue to force placements into the feed yard earlier than expected and at lighter weights. With the cattle on feed population already 5 to 6% above a year ago, cattle on feed numbers are not expected to drop below year-ago levels anytime soon. This despite the January cattle inventory report that stated feeder cattle and calf numbers outside feedlots to be down 938,000 head. Overall, the cattle markets remain on very sound footing. The fundamentals of the market and the underlying lack of supply will continue to support the inherent value of all cattle. The export market continues to be very supportive as well, but the seasonality of the market suggests that the near-term highs are in and that the market is likely to trend lower from here into summer. The typical seasonal break in the fed cattle segment is 10 to 13%, which would suggest a low in the fed market of 107 plus or minus is possible. The same applies to the feeder cattle market based on the feeder cattle index. A normal percent decline would put the index back into the 125 to 130 range. That concludes this week's closing bell report. Thanks for watching, and be sure to visit CattleFax.com for the latest market news and analysis.